Hello, folks. Welcome to the second of a three-part disability insurance series. I am Brock Falconer, Western Region Disability Insurance Manager at Illinois Mutual. Small carrier out of Peoria, Illinois, doing big things. We're partnering with OCI to make sure that you guys have, bare minimum, a foundational approach on disability insurance sales, opportunities, and ways, again, to congruently promote disability insurance sales along with your proprietary markets. We will not, as a carrier nor OCI, expect you to reinvent the wheel or stop what you're doing to be successful. We just want to make sure that you guys are well equipped on being proactive, on laying the foundation of why disability insurance is important to clients, why ensuring the most important asset is probably one of the most underutilized and underthought about things in the insurance realm. And I think we can all concede, regardless of your proprietary markets, that an ability for your client to have an income is going to be very important to insulate the work you've already done with them, insulate your relationship with them and make their stickier clientele, as well as give you a continued opportunity to build upon all the ways that you're helping that client. Since without an income, chances are a lot of future opportunities are unfortunately going to go to the wayside. Today, we're going to focus specifically on business owners, as in the disability or income protection realm. This is probably the fastest growing market, and these are definitely folks that we're dealing with on a daily basis, either within our proprietary clientele or with very quick and easy referral connectability to our clientele. And these are folks that have probably the most detrimental effect should they suffer a disabling event, because they have multiple entities that would be affected. Their personal life, of course, as well as this small business that they grew from infancy, that is now their baby, and likely their plan for retirement, succession plan, so on and so forth. So let's get into a few concepts specific to business owners. Foundationally, we need to know what role this business plays for the client. Again, we're talking about many things from a retirement plan, succession plan to other generations, probably an ability to work maybe later into their careers than most salary positions, so on and so forth. What kind of family members and employees rely on them? We don't want to sell off of a scare tactic in any way, shape, or form, but oftentimes people don't realize the importance of the role that they specifically play. When going into a business, if we talk to Mr. or Mrs. Business Owner and we say, hey, Mr. or Mrs. Smith, what's the most important piece of machinery you insure in this warehouse or this business? What's the most important person that works here? Well, oftentimes this business owner is going to look outward. They're going to think about their printing press or whatever that piece of machinery is, or their most valued employee, whether it's in kind of a sales position or maybe kind of a VP of the company. But they're not often thinking about the fact that, no, you are the most important piece of machinery. You are the most important person here. Without you, this company will not churn and burn the way it is. So let's make sure that we're first ensuring the most important piece of machinery and the most important person. Oftentimes we think about a succession plan as being something that really is only going to be in detriment, should the successor not have the same aptitude, emotional connection, or drive as the individuals that we're working with. But one of the biggest detriments to that is if it needs to be implemented sooner. What if that owner actually isn't able to work until the years that they predicted they would be, and now that successor has to take over and probably be unprepared for it? Disability insurance is a fantastic approach to how to ensure a succession plan. Obviously, there's some mortality or life insurance opportunities there as well that we should focus on, but let's be holistic in making sure the entire risk protection portfolio is covered. Not to mention the fact that you're 6 times more likely to suffer a disabling event than you are to die during your working years. So again, I think a morbidity and mortality, which is disability and life insurance opportunity, is there to make sure that succession plan is insured. Very quickly and easily, they should answer the question of how the business would suffer if they couldn't work. We know, and we can really concede to business owners and speak to their heavily pride-filled persona. Mr. and Mrs. Smith, I know that if you had one barely working limb, you would find a way to get into work. I understand that. I'm essentially self-employed in the insurance industry, and I completely get it. However, the requirements of your job even far surpass mine because of the physicality of it. However, what if we can fill an idea and put an insurance in place so that you do not have to find a way to crawl or roll into work? What if we can take care of your personal fiscal responsibilities or your income protection, and separately make sure you have a pool of money to pay for your fixed overhead expenses, both being paid to you because of the fact that you showed an inability to work? We know you can get in here. We know that you are the most motivated and pride-filled individuals around because of the fact that you have taken upon yourself to be a small, medium, or large business owner. However, what if instead of you feeling like you have to get into work, you can physically take a step back? Not emotionally, because we know that's just not going to happen, but what if you can physically take a step back, have enough money to get by, to keep your personal expenses intact, keep the business expenses paid for, and recover 100% so that you can get back to be the great contributing part of this business that you are today? Let's face it, you're going to be somewhat of a detriment to the business should you not be able to focus on a very high percentage of your current ability. Let's find a way that you can get back to work quicker, recover quicker, and make sure that everything is going to be solid and foundationally protected when you get back into it. What are your fixed expenses, and how would you be able to keep paying them should your business suffer because of your inability to work? How can we potentially protect these expenses so that you, again, can recover, get back to work quicker, and again, have this viable business strong and functioning well when you get back? Do you have a salary continuation plan in place? Keep in mind, and I'm not a tax attorney or any kind of legal representative whatsoever, let me put that out there. However, please note that based on the construct of the business, S Corp, C Corp, LLC, there is some legal situations that arise should a disabled owner still pay themselves from the business. It is actually based on the structure of your business potentially illegal to pay yourself should you be unable to contribute to the business. Therefore, a salary continuation plan, just like a succession plan and a buy-sell agreement between multiple owners, this is a legal documentation that should be constructed so that there's an ability for the business owner to still receive some income should they suffer a disabling event and not be able to contribute to the business. What better way to ensure such a salary continuation plan as disability insurance? Just like what better way is there to ensure a buy-sell agreement with disability language in it than with a disability buyout policy? Illinois Mutual specifically does not have one of those available. However, an income protection plan can play the same role, and there are carriers that do specifically have disability buyout policies available, please note. Again, getting back to the foundational approach to really what we need to talk about with business owners, there's two sides of the coin. Mr. and Mrs. Smith, how much money do you make? $200,000. Fantastic. I would assume that's probably your gross income. Is that correct? Yes, it is. How much is Uncle Sam privy to? $60,000. So that's their reportable taxable income. Okay, fantastic. For income protection, we can give you a 60% tax-free plan that covers that $60K income. That's going to be $3,000 a month tax-free, takes care of your personal finances. Probably close to 80 or 90% of your reportable taxable take-home pay. However, there's a reason why your $200,000 gross income went down to a $60K taxable income, and that's because your fixed overhead expenses come out pre-tax. We need to separately set up a 1-2 punch policy: income protection, paycheck insurance for your personal $60K income, a business expense or business overhead expense policy that covers your fixed expenses. Therefore, both policies are in play when you suffer a disabling event. Personal expenses taken care of tax-free, business expenses taken care of with a pool of money in a business expense contract that allows you to reimburse yourself for your fixed overhead expenses. A W-2 employee has their gross income covered by an income protection policy because they do not have pre-tax liabilities on the business expense side. A business owner, we need both of these policies in combination to make sure that that individual is taken care of holistically. Here's an idea of eligible expenses. Keep in mind that it does need to be a fixed expense. Therefore, a lease or rent payment or mortgage and loan interest can be covered, but not a specific mortgage on a property because that is termed. Again, these are fixed expenses that come in regardless of whether that business owner is able to work or not. These are expenses that keep the lights on, keep the bills paid, and keep this company strong for one of two reasons. Either the disabling event, and this is more likely than any other, is going to be short-lived. Therefore, they need a period of time that they can, again, not have to force themselves to get into work, recover, get back to work at 100% once that disabling event is through. Keep in mind the majority of disabling events are under 3 years. However, if it is more of a more rare yet permanent disabling situation, we again need to keep this business strong, keep it burning and churning, keep it valuable so that we don't have the sharks coming in and circling the business owner in the waters and really offering them more of a short sale price and value for their business. Once the income stops and stuff starts faltering and the lights start flickering at the company, again, there's no way you're going to get the correct and proper value for that company. So keep in mind this insurance does two things for an individual. Protects them for things that they're going to keep and also protects them for things that they might have to go to market with. But really, we're not just selling them an insurance policy. We're giving them time to make an informed and fiscally responsible decision so that they're not in a situation where everything is kind of house of cards falling and dire straits. We have marketing pieces and partnering with Ophia. You definitely have access to these that really allow you to make a lot of these ideas tangible. Fillable business expense sheet here. We have a fillable mug sheet as well to show what your mortgage, utility, and grocery obligations are. We like to start foundationally versus go in and try to throw everyone their Mercedes, BMW, or Cadillac. We know different policies need to be built for different business owners and clients. Just note there's a lot of marketing materials like this that take a lot of the guessing game out of your ability to talk about what these concepts are and what they relate to. We love acronyms in insurance, no different in disability. We talk about personal paycheck coverage, income protection, right? Taxable reportable income that Uncle Sam's privy to for a business owner, or gross income for a W-2 employee. There's elective benefit periods, which gives you the ability to insure yourself for kind of whatever chunk of time you want to purchase. We can do as little as 6-month period of time. However, more common, we have a 2 or 5 year period of time that most people elect for most policies, and then we can go all the way till retirement age. Should the premium tolerance be aggressive enough for the client, as well as kind of what their biggest fear is. A lot of breadwinners typically go for the most comprehensive policies because they know even being covered for 2 or 5 years is great. They know that maybe there's going to be no one else that has an ability to bring income in should they only have coverage for a shorter period of time. Reimbursable business expenses, again, that is the separate piece for business owners. You have income protection on one side of the fence, business expense on the other. Both of them cover separate parts of the client's gross income as a business owner. And just note as well, a purchase of both policies, which I would hope most business owners would do, since I would argue neither is more important than the other. There would be a 5% discount on each policy as well with a purchase of both. And therefore, that's where the key discounts in combination of those come from. So that's our business owner perk program. We do have some marketing, again, specific to the perk program, but just wanted to make sure that you weren't bereft of having one more acronym to focus on. So let's talk about some ability to really kind of sweeten the deal for these business owners. We talked about the multi-policy discount. income protection plus your business expense side and a 5% discount on each. We also have multi-life discounts. So should it be a situation where income protection is really going to be the only viable insurance, we do offer a 5% discount if we get 3 or more folks that work at the same company. Kind of a referral discount, multi-life discount, list bill discount. You'll see that on a lot of different kind of terms with a lot of different carriers, but just note that there are some opportunities there. We can do, and typically do in the majority of our cases, a price reduction by doing an occupation class upgrade. Very arbitrary kind of terminology specific to disability insurance, but just note every occupation comes with a risk number. We have a number from 1 to 5, 1 being the highest risk, so therefore higher premiums, 5 being the lowest risk and best premiums. Of course, an occupation class 1 is going to be someone very hands-on, welder, roofer, someone like that. A class 5 is going to be your pencil pushers, people typically in an office environment and therefore lowest risk of accident, injury, and overall claims and best price. For any business owner that's owned the business for at least 2 years and shows Uncle Sam taxable reportable income of $30K at least over that expanse of time, we can upgrade them 1 occupation class. So even though they might be a roofer and therefore kind of one of the more hazardous jobs you could have out there, if they're self-employed, shown at least $30K of income for at least 2 years, then we're looking at the ability to upgrade them to a class 2, therefore give them a better price. Depending on the occupation classes, the states, the age, so on and so forth, we're typically seeing a discount of between 10, maybe 20% from one occupation class to the next. So again, this is nothing to shake a stick at. This upgrade opportunity is fantastic. And really the only detriment to it is newer business owners because they haven't established any kind of level of success really yet, or at least not a tangible one. We're not able to do the upgrade, but at least 2 years of business ownership would allow us to for all occupation classes outside. Keep a note, no dentists and doctors. Those folks are not going to be able to be upgraded. We can also do a business owner allowance with a scenario before of, again, 200K of gross income, 60K reportable income. And we can actually build in more reportable income based on what we call a business owner allowance. What this does is it gives us the ability to add essentially about 20% onto the number that Uncle Sam sees to potentially give that business owner access to a little more income protection. This has been created and put in force because of the fact that we're very conscious that business owners deal with so much tax liabilities, and we know that they utilize as much tax shelter as possible to lower that taxable liability. We get that, we understand that, and again, we celebrate them as taking on the challenge of being a small or medium business owner. Therefore, we'll concede by giving them, again, the ability to build in 20% more income just to allow for a larger income protection policy. Business protection is important. Kind of hit before on the fact that we're not only keeping that business strong so that business owner has something to go back into once they recover, but also potentially gives them the ability to keep that business strong and valuable to take it to market on a non-short sale basis. Also, arguably, it would be important for internal and external motivation for that business owner to not only take advantage of income protection and business expense, but also to really be open and upfront about the fact that they've taken the highest level responsibility to keep their own personal stakes strong on the income side, but also to keep that business protected. It could easily be argued that a client is going to be able to get a little bit more buy-in from their employees, maybe a mandatory overtime. Maybe we need to, have you pick up a few extra duties, to help out the business because that owner goes down. I think there's going to be a ton more internal motivation for that. What about external motivation? Maybe other somewhat competing folks out there in the field. We know that a lot of business owners know essentially everyone else that's in the same market. Do you think maybe you having the ability to show that you've taken full responsibility in keeping your business strong and you having somewhat of a friendship and partnership, even though you might be in competition, with that other mechanic shop or other plumber shop. Chances are they're going to be much more willing to help you out, maybe take some bids off your hands, but not try to take the organization that's offering the bids up away permanently. Again, could be a great referral tool as well. Just note that there's a lot of opportunity to really make this not only important for your clients, but really having them utilize it as a tool to make sure that those around them know that they've taken responsibility and that they care about the people that work for them as well as other folks in the industry. Here's an excerpt from one of our business expense policies. Just wanted to point out that we're typically very expensive for this type of coverage. I mean, $5,000 a month in business expense reimbursement for the client is going to be $80 a month in premium. This is all linear. Therefore, $2,500 a month would be $40, so on and so forth. And again, this isn't going to be the same cost for every single client. This is just an idea of how inexpensive business expense is in comparison to income protection, because it's really covering something separate, as well as being not a cash in hand policy, but a reimbursement policy. Also note that this policy does include the return of premium rider. We talked about this last session. This is an ability to get 100% of your premiums back at retirement age, because we know there's a 3 out of 4 chance the client will not trigger this policy, knowing there's a 1 out of 4 chance they will. Therefore, 100% of money is returned at retirement age minus any claim dollars paid. Therefore, it's somewhat of a no-loss policy, just like income protection is with return of premium. Business owners love this, and they love the idea, again, showing here a 6.81 guaranteed rate of return someone would need to gain should they actually put in this extra $242 for this rider to get all of the premium back at retirement age. Great ability for someone to really have a tangible feel for what you're paying for extra in that rider and what it would do for them in the long run. Again, putting the premium for this rider in the market, they would have to get a 6.81%, and this is specific to this client's age, occupation, so on and so forth. This is factored per each client that we show the rider with. Guaranteed rate of return. No money market manager is going to be giving you that guarantee. Give you a quick idea on some occupations that we have specific marketing for. Really, this is going to be a lot of your brick and mortar folks, a lot of people that you can get a lot of daytime traction in the local arenas. Hygienists are fantastic in partnering with dentists to make sure that the hygienist and brick and mortar is covered for that dentist. Could give you access to the dentist should you cover the hygienist and then approach the dentist afterwards. Carpenters, electricians, hairstylists is a great idea, not to build a book off of hairstylists, but to maybe utilize covering a few of those folks to get connection to that hair salon owner that may own the other 4 or 5 salons in the surrounding area as well. Farmers is a very unique one for us as well. We can actually cover farmers based off of herd size and acreage. Keep in mind that farmers have more tax shelter available to them than probably anyone else on the planet. Amazingly, they never show an income, but have beautiful equipment, trucks, so on and so forth. And we can actually underwrite them even if they don't show an income based solely off of either herd size or acreage. A total potential disability insurance package of $5,000 a month is available to farmers. $2,500 of paycheck insurance and up to $2,500 of business expense. Keep in mind, again, we have marketing that's specific to these occupations and more. And one thing to note, even though it's very small, keep in mind that all of these have 100 years of claims history shown in a pie chart on there. Again, important because disability insurance connotates a little bit differently than what we actually see claims go out for. So that's showing you as much, if not more, illness claims than accident injury. And I think that can be an important tool in showing clients that this is 24/7 accident, injury, illness coverage and insurance for the most important asset for paycheck insurance in everyone's life, and for business expense for 1/2 of a business owner's liabilities, as we cover them personally on the finance side, as well as make sure their business is strong, up and running. I hope you guys can join us next week. I really appreciate your time today, and definitely let OCI know should any questions arise. We'll see you next week.